Sun Pharma as well as a lot of the other pharmaceutical stocks. We have Aditya Khemka, Fund Manager, InCred Healthcare Portfolio PMS joining in. Aditya, hi, welcome to the show. So how would you read the news on Sun Pharma, the warning letter for the Dadra facility? Do you think that there'll be a discernible impact on earnings?
So if you look at the warning letter, what it essentially does is it stops new approvals. I think for the US business of Sun Pharma and many other companies, we do pencil in a certain amount of growth from new approvals that comes from these facilities. To that extent, there will be some, earnings downgrade that one should expect, but it will not be very material because from Dadra, it's not too many ANDAs that were pending approval in any case. So there will be marginal earning downwards, if at all, in Sun Pharma because of this development.
So would you see this dip as a buying opportunity?
Look, the way we look at it, the current valuations of Sun Pharma and majority of the large cap pharma stocks seem to be a little stretched. Remember, the earnings of these large cap pharma stocks, including Sun, Dr. Reddy's, Cipla, Cadila, includes a generic Revlimid, which will basically go down to insignificant profits in FY27. Hence, a cash flow, which is a 2-year, 3-year cash flow, probably today is getting a significant valuation multiple, which perhaps is something that, one should be cautious about.
Okay. But Aditya, on a larger scale, do you think that Sun Pharma, how would you read the fact that 3 of their facilities do have regulatory issues? Do you read it as larger companies are much better placed to manage those regulatory issues? Or do you think that this is definitely going to impact their earnings down the road?
So, Ekta, actually, on the contrary, if you see, it's majority of the Indian large companies that have problems with US FDA, which is ironical, agreed. Many of the smaller companies that do the US business seldom fall into US FDA regulatory issues, is what I've observed over the past 10 years. And, hence, I think it's a matter of being able to manage according to the playbook of the FDA at a large scale. At a small scale, I think we still end up managing pretty well. But maybe at a large scale, somewhere, things don't fall in place. So will it impact earnings? Yes, it will. To what extent, that is clearly not very clear because we don't know which ANDAs exactly come from the other Dadra, which were basically supposed to be launched in the next 1 or 2 years. So we don't have the clarity or the data from the company, and hence we don't know what kind of earnings impact we will have. But it will be minor, and it will be spread over the next 2 years for sure. So I think that's how we read this development. In terms of companies' non-compliance with US FDA, especially larger companies, I think that's something we have been seeing consistently now over the past 10 years. Yes, there is some movement in the FDA's playbook as well. They keep changing the playbook over time. But I think it's high time that Indian pharma companies which want to be, invested into the US business got up to speed to it. I mean, it's been a while that they've been facing these issues, but they keep recurring. And it is disappointing as investors to see that happening time and again.
All right, so branded generics, not your scene here, irrespective of whatever happens. Right now, you believe the valuations are a little stretched. Let's talk about unbranded generics then. What are the names that you like out there? Rather, unbranded generics is not your space. Branded generics is something that you like. Where are the valuations comfortable? What are the names that you own? What are the names that you believe will outperform going forward?
So the names we own under branded generics include RPG Life Science, we own Indoco Remedies, we own FDC, we own many other branded generic stocks, Torrent Pharma, JB Chemicals, so on and so forth. The reason why we like these stocks is because their cash flows are sustainable. These cash flows come from brands that they've built in a branded generic market, and these brands basically go on autopilot growth. Beyond a certain scale, the growth becomes an autopilot mode because the patient and the doctor become familiar with the brand. And these are low reinvestment need businesses because the cash that we generate from this business need not necessarily be invested into capex or working capital. It is cash that can be distributed to shareholders in forms of dividend or buyback, or it can be used to do inorganic growth, as you have seen Torrent and JB do in the past. So that's the reason we like this space, and these are the stocks that we own.
That diagnostics is probably the space to be vis-a-vis, say, hospitals in the next 1 to 2 years?
So that's correct. In our assessment, we think diagnostics stocks have derated significantly over the past 2-3 years. But that's not true for all diagnostic stocks. That's true for 2-3 stocks that we own. So we own Krishna Diagnostics and Thyrocare. And for both these stocks, we have seen a significant derating happening over the past 2-3 years. And we feel that the earnings momentum of these stocks in the past couple of years has not been very good. But there have been reasons. They have been reinvesting in expansion, OPEX, and that OPEX, when you do expansion in terms of footprint, the OPEX comes upfront and the revenue comes later. So I think that's what's going to happen in, these counters, and the derating has been unjustified to that extent. And in the next 2 years, when the corresponding revenue for the expansion comes to the P&L, that's when these stocks will see a re-rating and a profit expansion. And that's really the holy grail of investing, right? To find stocks where there is earning growth momentum, and then, the P multiple also goes up. So that's how an investor makes alpha. So we are hoping to make significant alpha in the diagnostic space over the next 2 years.
What about the hospital space? I mean, diagnostics, hospitals typically go hand in hand. There would be some of the value bets out there.
True. So within hospitals, obviously, we have said earlier that the valuations of most hospitals seems to be very, very stretched. But there are a couple of hospitals that we own, namely Healthcare Global and Aster DM Healthcare, where we feel valuations are very, very comfortable, where we feel earning growth will be fairly good, and there is room for multiple expansion in both these stocks.
Okay. Just quickly on hospitals, what are you advising your clients when it comes to this entire uncertainty with regards to standardization of rates? And do you think that's impacted investments into the sector?
So no, if you look at the private equity space, after this entire, standardization of rate thing came up, there have been actually more private equity deals in hospital space after the announcement. So I think by and large, the entire industry and the investor community has taken a stance that the standardization is just not practically possible, given that the cost structures of different hospitals in different cities with different specializations is so very different. To have one standardized rate across the board just, seems very impractical when we talk about it. And hence, I think it has been something that people have put behind them. It is not something that people are taking into consideration today. And hence, we don't believe there is a business impact coming forward in the hospital space. What we are cautious of is the valuation at which you are buying the asset. Some of the larger hospital chains which are listed, their operating cash flow to EV is 1.25%, which means in sense of EV to OCF multiples, they're trading at 80-90 times. That's closer to what a DMart or a Titan is trading at. And if you look at some of the smaller hospital chains where earnings are good, cash flow is good, they're trading at 20 times EV to OCF, which essentially means that these are not even getting the value that these hospitals used to get 10 years back. So I think that's the kind of polarization in valuations we have noticed in the space in the past 2 years. And we are hoping the stocks will converge, the valuations will converge. And that's how you create alpha in being in the right space.
Right.
Okay. Just quickly before we, wrap up this conversation, Aditya, I was reading a very bullish note on the CDMO space. There's a lot of interest in the likes of Piramal Pharma, as well as the likes of Syngene, the biotech funding, the China Plus One opportunity. All in all, what's your take on it, and which are the stocks that you have in your portfolio to probably play that theme?
So in the CDMO space, we really like the companies that do true CDMO, which means companies that engage with contract development manufacturing activities with the innovators. It has become a slightly abused word because companies that do contract manufacturing for generics also have started calling themselves CDMO. And I think that's not really, the jargon that the industry wants to use. So we like companies like Jubilant Pharmova, Syngene, Hycal, Newland, because if you see a majority of their revenues or profits are actually coming from businesses which they do with innovators. Why innovators? Because one, the innovator business is small volume, high value, high margin, and hence high ROE. And two, it is a sticky business because the innovator has a patent protecting it from competition. And that enables the business to be recurring in nature and the cash flow to be recurring in nature. So we really like these companies, this business model. And that is where I think the China Plus One and the Biosecure Act, those tailwinds will actually play out in that particular space. It need not necessarily play out on the generic space. And the companies that we own in this bucket are Syngene, we own a Newland, we own a Jubilant Pharmova, we own, a couple of other Hycal, a couple of other names like that.
All right, Aditya, thank you so much for joining in and putting the spotlight on the pharmaceutical, healthcare, diagnostics and hospital space, telling us that Sun Pharma, while it may not impact the current US FDA issue, may not impact their financials as much, valuations anyway are stretched. Meanwhile, while we